Business Standard Morning Show. I'm Venu Sandhu. Let's take a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The government has come up with regulations that require virtual private network or VPN service providers to collect and store a host of personal information from their subscribers. While the stated intention is to strengthen cybersecurity, the compliance requirements have raised privacy concerns. Here's a report on how the new rules may undermine your privacy.
The Indian government has recently asked VPN service providers to register and record certain information about its users for a period of at least 5 years. This was one among the several new directives issued by CERT-In, or Central Emergency Response Team, which is India's national agency that looks into matters of cybersecurity. The new directives are slated to come into effect from June 27 this year. However, experts say that these rules raise serious privacy concerns, especially the ones about VPN service providers. But before moving ahead, let us understand what a VPN really is. VPN, or a virtual private network, establishes a secure and encrypted connection between a user and the internet. VPN helps users hide their browsing history, IP address and geographical location, as well as their web activities and the devices being used. In a connected world, it is of immense use to journalists, whistleblowers and activists. Now let us understand how the new rules pose challenges to a VPN user's privacy. CERT-In's new rules require VPN service providers to collect and store certain accurate information for a period of at least 5 years, even after a customer has cancelled his or her subscription. The personal information to be collected and stored includes names, IP addresses, emails, contact numbers, and purpose for using the VPN service. Data centers and cloud service providers will also have to abide by these directives. Non-compliance of these norms can attract a jail term of up to 1 year. Many VPN service providers offer a no-log policy where they promise to not collect or log traffic that passes through their servers and users' online activities. But the new government directives ask the service providers to store information that is sensitive, personal, and identifiable in nature. Another provision raises the possibility of VPN providers being made to store usage logs, which include a person's browsing activity, for a rolling period of 180 days. Such rules go against the premise of VPNs, which thrive on anonymity and privacy. All organizations are mandated to maintain logs of their ICT, or Information and Communication Technology systems, in India according to the new regulations. The Internet Freedom Foundation said that the ambiguity over what is covered under all their ICT systems leads to concerns such as the government or private enterprises having access to more data than necessary.
So there are some VPN providers which do state that they are no-log providers. The nature of information which is necessary, zero logs VPNs will not be permitted and may suffer either blocking of their specific servers or even prosecution as entities by itself for non-compliance of these directions. The 180-day log retention, if you look at it, they are enabling logs of all their ICT systems. So by itself, it is a very general and vague requirement which is being placed on all entities. But to what it is applicable, it says all their ICT systems, which would essentially mean all types of activity. It's intended to improve cybersecurity, but ultimately ends up undermining it. Also, certain mandatory data retention provisions will increase the kind of personal data that service providers need to store for longer periods of time. What happens is quite often IT systems are insecure or their vulnerabilities discovered. Now, when you're mandating as a security measure to store more details about you, about me, by saying that it makes us more secure, it actually makes us more insecure. It's counterintuitive because the details may leak and then the individual may get profiled, their information may get misused. So the view of this policy document is towards undermining privacy. Several provisions may increase surveillance powers. There's no data protection authority to ensure that the data which is asked by certain and is stored will be used only for the purposes of cyber security.
3 VPN service providers, Surfshark, Proton VPN, and ExpressVPN, have told a US tech publication that they don't plan to follow India's new rules on data collection. All 3 reportedly expressed intention to continue with their no logs policy. The US tech magazine quotes Proton VPN as saying that India's new requirements will erode civil liberties and make it harder for people to protect their data online. Experts also question how these data collection and retention requirements will help in improving cybersecurity. Moreover, localization requirements also raise concerns about surveillance, especially in the absence of a dedicated data protection authority.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It's unclear how the government thinks storing sensitive and personally identifiable information of users will ensure cybersecurity. Moving on, let's turn the focus on the recent hike in repo rate. The Reserve Bank of India hiked the repo rate from 4 to 4.4% on Wednesday. Home loans from banks are linked to the repo rate. So what will be the impact on existing and new borrowers? And how should they respond? Let's find out.
The RBI hiked repo rate by 40 bps. This hike will translate into higher equated monthly installments or EMIs on new home loans. For existing borrowers, the tenure will increase, which will translate into a higher interest burden. But if the limit on tenure, usually retirement age for salaried employees and 65 years for the self-employed, gets breached, their EMI could also rise. Interest rates are headed upward. Anarok Group Chairman Anuj Puri has said that the RBI's rate hike signals an imminent end to the all-time low interest rate regime, which has been one of the major drivers of home sales across the country since the pandemic began. Experts believe rates will continue to harden for some time, given the high and persistent nature of inflation. Existing borrowers should go in for planned prepayments. According to Bank Bazaar CEO Adil Shetty, existing borrowers should use any windfall or savings to prepay loans. Borrowers should aim to prepay 5% of the loan balance every 12 months, he says. By prepaying at this optimal rate, one could reduce the loan tenure from 20 years to 12. Borrowers still on a loan linked to the marginal cost of funds based lending rate or MCLR should shift to a repo rate linked loan after careful calculation. Shetty says unless the difference is more than 50 basis points, you could stay put in certain circumstances. EMIs on repo rate linked loans are expected to be revised from next month. An MCLR linked loan may reset after several months, assuming your loan is linked to a 12-month MCLR. Hence, do a detailed analysis of costs before shifting. Home loan balance transfer can also reduce your interest burden. Aditya Mishra, Director, Home Loan Desk at 4B Networks, advises the evaluation regarding whether to shift loan must be done every quarter. If you have more than 15 years of tenure left, switch if there is a difference of just 25 bps between your existing rate and the best rate you can get. If 10 to 15 years are left, the difference must be 50 bps. And if 5 to 10 years are left, switch if there is a difference of around 70 bps. In a rising rate scenario, home finance companies whose loan rates are not linked to an external benchmark could hike their rates by more than the quantum of the repo rate hike. My Loan Care founder and CEO Gaurav Gupta believes new borrowers will be better off going for a repo rate linked loan rather than one benchmarked to the prime lending rate. Banks whose rates are linked to an external benchmark could possibly hike the spread on their loans for new borrowers.
What should new home loan borrowers do in a rising interest rate scenario? Should they go for a repo rate linked loan or should they go for a PLR linked loan? A repo rate is an external benchmark. This is the benchmark to which all banks' loans are linked. A PLR or prime lending rate is an internal benchmark. This is the benchmark to which all housing finance companies' loans are linked. And since the PLR is an internal benchmark, housing finance companies enjoy some leeway. It is possible that their loan rates could climb at a faster rate than the rate at which the repo rate goes up. Hence, it is advisable to stick to a repo rate linked loan.
According to experts, comparing rates becomes crucial in a rising rate scenario. They suggest one should budget for higher rates in the future and avoid over-leveraging in these circumstances. A rate that appears inexpensive today may not remain so in the future. Higher interest rates will reduce the loan amount new borrowers are eligible for. Get ready to arrange a higher down payment. Finally, with prepayment becoming crucial, go with a lender that offers easier terms and conditions for prepayment.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Back to markets. As most global central banks, including the Reserve Bank of India, embark on a rate hike cycle to battle inflation, analysts expect markets to remain choppy as they adjust to the new normal. So where can investors put in their money in a rising interest rate regime? Here's a report to answer that question.
With the surge in global commodity prices, global central banks, including the RBI, have turned hawkish to tame inflation. Thus, analysts expect volatility to be the new normal for equity markets. Frontline indices Nifty 50 and S&P BSE Sensex have tanked 4% each so far this year amid a triple whammy of rising interest rates, inflation, and geopolitical tensions. With the RBI joining hands with global majors in pivoting policy towards inflation control, analysts expect the central bank to aggressively increase rates in 2022 to drain liquidity out of the system. Hence, the question revolves around how investors should design their portfolio in a rising interest regime. According to A.K. Prabhakar of IDBI Capital, banks and life insurance companies could be the safer bet amid the rate hike regime.
Banks also will benefit because it is a rate cycle reversal. Now we were in a reducing cycle. Now we are in an increasing cycle. Normally, loan rates will rise faster than the deposit rate. No, because people normally don't premature and then 100% doesn't happen. But in loan rate, the rate transformation will happen very fast. No. Because the clause is there, like life insurance in that space, where, that is one sector, where I think it can benefit from the rising interest rate, it can increase their margins also. Rising interest rate is never good for credit, industries which are growing on credit, mainly in real estate space, where the amount is very big. See, at least consumer durable, the amount is very less and people will not feel the pinch. But in reality it will be known very soon and the demand might taper off. We have seen very good demand even in April. the amount of registration which has happened in Mumbai is one of the highest ever. So there it will have an impact. Real estate will have the maximum negative impact due to rate hikes.
On the flip side, analysts expect rising interest rates to dampen capital-intensive companies with heavy debt on books.
We are in a rising rate environment. The banks and all these NBFCs have been able to improve their margins also. So even if the cost of capital goes up by say X%, they are able to pass on more than X to their customers. And that's why it's not necessarily that the banks or NBFCs will do well. In fact, I would like to think it in a way that since the economy is strong enough, there should be more credit growth and banks should be able to deploy their capital profitability even if there is an environment, rising interest rate environment. So personally, we are not very bearish on the markets from these levels and asking people to invest in financials. And other than that, obviously the regular sectors like refineries, we have been bullish. So we have asked people to look at that, and IT stocks have also corrected. So that's where one should focus. Consumption post-June, we are expecting like the Met and other forecasting agencies have already announced that it's going to be a normal monsoon. So post-June, July, I'm expecting a rebound in rural consumption. And at that time, post that, we'll look at the consumer names, not now. I think they are into correction and we would like for better prices to come. Auto, we are not that bullish on that sector. So there is a lot of competition, disruption from the newer technology and new startup players in two-wheeler side. On four-wheeler side, when there was a lot of demand, they had supply issues. And then now, due to higher prices, because of the metal and other inputs, the demand is not that much high.
Overall, investors may look to add financials and IT to their portfolio, while debt-heavy capital goods stocks may be avoided in these times. Meanwhile, Friday's trading session will largely focus on stock-specific action amid Q4 results season and global trends. Index heavyweight Reliance Industries is set to announce its March report card today amid expectations of a somber sequential earnings growth. Analysts expect the Mukesh Ambani-led conglomerate to report consolidated net sales and EBITDA growth of up to 52% and 35% year-on-year and up to 22% and 6% quarter-on-quarter. Furthermore, the net profit growth is pegged in the range of 18 to 28% year-on-year, but down up to 16% quarter-on-quarter. Among key monitorables, analysts will eye management's commentary on benefits from higher fuel margins and crude sourcing strategy, comments on the impact of higher petrochem prices on domestic demand, and signs of reversal in telecom subscriber churn. In the primary market, investor participation in the mega LIC IPO on its third day will be on the radar after the issue sailed through on day 2.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है इन्वेस्टिंग मेड इजी एंड रिवॉर्डिंग विद 5 पैसा। इन्वेस्टमेंट्स इन सिक्योरिटीज मार्केट आर सब्जेक्ट टू मार्केट रिस्क। रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
You would have heard that Bengaluru-based startup Open recently became India's 100th unicorn. With the latest funding round, Open's valuation soared past the $1 billion mark. Or perhaps while browsing through YouTube and Spotify, you might have come across advertisements by Jupiter. Well then, you've at least had a brush with a neobank. But what exactly is a neobank and how is it different from a traditional bank? Take a look.
Neobanks have made a splash in the fintech industry. New players have entered the market in considerable numbers. The uniqueness is they simplify financial services to the point where they meet the expectations of today's digital generation. So, how is a neobank different from the traditional banks we are used to dealing with? The answer lies in the definition. A neobank is a digital bank that does not have any branches. Instead of a physical presence at a set location, neobanking is entirely online. A broad collection of financial service providers who primarily target tech-savvy customers comes under the umbrella of neobanking. Basically, a neobank is a fintech company that provides digital and mobile-first services like payments, debit cards, money transfers, and lending. Neobanks bridge the gap between the services that traditional banks offer and the evolving expectations of new-age customers. They do this by providing personalized experience, employing data-driven insights, and offering value-added services. While traditional banks continue to struggle with bringing their legacy-based infrastructure into the digital age, neobanks leverage their modern digital platforms to analyze customer data and make data-driven decisions. Neobanks can also afford to slash customer fees significantly since they don't have to bear the expense of running physical locations. Among the user experience enhancements that neobanks offer because of their tech-driven nature is hassle-free account creation. Since they don't have a physical office in neighborhoods, consumers can create their accounts from their mobile devices from the comfort of their homes. And given their technology-driven KYC process, the account can be ready in just a couple of minutes. But how would you avail of a neobank service? The same way as you would order food using Zomato or book an Uber cab, by using an app. Neobanks provide services on their mobile applications. In India, neobanks don't have a bank license of their own. Instead, they count on bank partners that are regulated to provide bank licensed services. The likes of Jupiter, Fee, Neo, and Razorpay X are currently working in partnerships with traditional banks.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
That's all for today. For more news and analysis, please log into our website www.business-standard.com. We'll also be back tomorrow morning with more. Stay tuned and thank you for watching.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.